Here are the common questions we are getting today. Are home prices going to come down? Will the housing market crash? Is there a housing bubble? Well, let's analyze one question today. Are home prices coming down, whether it's in Anaheim Hills or in Orange County or California? So stay tuned and let's look at what's going to happen. Before we can answer that question or analyze this question, let's see what has happened in the last couple of years or the last 6 months. Home prices are still going up gradually, 1 or 2%. In fact, in the last 12 months, they have gone up almost 20%. There is still a shortage of homes. Yes, the home sales activity and the number of home sales are down. Interest rates are up, although in a week or so they have come down, but compared to a year ago, they have come down. There's a shortage of homes, but the inventory is going up slowly. So let's look at some factors of what's happening in the next few months. One thing is for sure, the housing demand has slowed down, and once that slows down, it could affect the home prices coming down. But then again, it also depends on the supply and demand, because there is still a supply issue. Supply of homes are still down, rents are very high, rates are around 5%, but they're still better than 10% or 12% or 8%. So there is still activity out there. According to a report by Redfin, the housing index demand has dropped by 12% year over year. What that means that the number of people looking for homes, searching and looking for homes has dropped. So that is a big number to look at. Before I move on to the second point of why there is a shift in the housing market, I wanted to introduce myself. I'm Mike Patel with First Team Real Estate right here in Anaheim Hills, and I appreciate you watching my videos and visiting my channel. If you could subscribe to my channel and make some comments and share, I would really appreciate it. I come up with new videos every week, possibly twice a week, and I'm glad you're here. So the next point, as you may know, 90% of home searches begin online, whether you go to Zillow or Realtor.com or First Team website or Open Door, any website that you go to. Most buyers start their search online, maybe 6 months ahead or a year ahead. But according to the Google search words, when they search for homes for sale, that search word term is down 10% from almost a year ago. So that tells you that less people are searching for homes at this time. Of course, that could change in a couple of months, but that tells us that the web traffic for searching for homes is down. Now, it could be because the rates are high, people are just scared of what's going to happen, inflation is high, so they're just holding back. We don't know. So let's see if those buyers, many of you or 90% of the buyers, come back and start their search. So let's look until what happens end of the year, and then we can analyze. But as of now, search traffic is down by 10% from Google. And as you know, Google is a big search engine. So a 10% is a big reduction, or a reduction to take into consideration. The third point where the demand is shifting is going to be slower, or it is slower right now, is that the open house traffic is down. Well, I think it's obvious. If the Google search is down, if less people are searching online, less people are coming out and looking at homes. So compared to early January 2021 or compared to February, March, April, where the activity was very high compared to right now, and today is August 2nd, wow, mid-year already, the open house traffic is down too. When we used to have homes for sale and they had open houses on Saturday, usually on Saturdays, we used to have 10, 20, 30 groups of people coming in. Now, I've noticed myself in the last couple of months, or actually last couple of weeks, I've been going out myself to visit these open houses, because previously there was hardly any open houses because the homes sold. Now I'm seeing homes in my neighborhood. I live in Anaheim Hills near the golf course, and I'm seeing open houses not only on Saturday and a lot more signs, but I'm also seeing the same open houses on Sunday. So there's more open houses out there, Saturday and Sunday, for 2 or 3 weeks in a row, and there's less traffic on these open houses. So that may affect the buyer demand for houses, and I'm not sure if that'll affect the home prices, but let's wait and see. The other very good reason to see why the housing demand is less right now compared to 6 months ago or a year ago is that it is actually taking longer to sell a house. Now, in the Orange County area, Anaheim Hills, Orange County area, in 2021, the days on market, what we call the DOM, was 8 days, which means when a house came on the market, it went into escrow within 8 days. Now, according to the statistics, according to the CRMLS multiple listing service, of which I'm a member, which I just checked yesterday, and you can see the chart, the DOM, days on market, currently in 2022, as of August, in the last few months, it is actually 13 days. So what that tells me is that it's taking twice as long to sell a house on average than a year ago. So that's a big shift in demand as well. What else adds to the slower housing demand and the slower pace of housing prices going up? Well, we've noticed that the search is down, open houses are down, it's taking longer to sell. But the other thing that's happening, and it's very critical, is that when homes come on the market in the last few months, the home sales are not as high as they were 6-7 months ago. What do I mean by that? Well, last year in 2021, homes were selling at 103.1% of the list price, which means that if there's a house for sale, let's say in Anaheim Hills, a house was for sale for $1 million, it actually sold for $1,030,000, $30,000 higher than the list price. Currently in 2022, if you look at the stats in the last few months, according to CRMLS again, which is the California Multiple Listing Service, which again I'm a member of, they're only selling at 100%. So homes are selling at pretty much the full price, but they're not selling at higher prices. I'll give you an example. I just closed an escrow last week. The house was listed for 1.3. It was on the market for 3 weeks. And then I noticed that the listing agent was thinking about dropping a price because I talked to him. So we made an offer at 1.2 and we ended up getting the house at 1.225. What that tells us that if the property or the house is not listed at market value, it's going to sell less than the market value. And if it's priced right, it's going to sell at that market price. So if its house is listed for $1 million and that's the market value, it's going to sell at $1 million. I just opened up another escrow yesterday in the city of Orange in Serena Heights. The house was listed for 1.5. It's been sitting in the market for 2 weeks. Wow, 2 weeks. Yeah, that is long in this market. It used to be they used to sell within 8 days. So the house was listed for 1.5. Then we noticed, we went to the open house and the agent told us that she's going to drop the price to 1.45, which she did. So we did write an offer and the offer got accepted at 1.45. What that means is that it was listed $50,000 higher than the market price, and now we're in escrow and we should close in 30 days. So the bottom line is homes are selling at market value. On one hand, we are seeing a shift where the demand is getting slower and slower, which should indicate that as few home sales, as they take longer and as less buyers are out there, that the prices should drop. On the other hand, the prices are actually increasing. I read a report a few months ago, and according to that report, companies like MBA, Mortgage Bankers Association, Freddie Mac, Fannie Mae, CoreLogic, National Association of Realtors, they predicted home price increase in the next 2 to 3 years. And the average price increase, according to these 5 companies, is around anywhere from 2 to 3% per year for the next 2 or 3 years. So on one hand, we are seeing a prediction of price increase. On the other hand, we're seeing a less demand. Time will tell in the next 2 to 3 months. Summer has been a little bit slow. Let's see what happens in the fall and what's happening with the inflation and the interest rate. They are down a little bit last week from a few weeks ago. So that's the good news. And let's pick up this conversation again in a couple of months. Thanks for watching.